Hi, Steve Sosnick here with today's Interactive Brokers Morning Market Morsel. Well, we've already had some volatility as I'm taping this, and I'm going to consider this today's action. Let's call it the yes but market. Um, we thought early on that we were going to build on the rallies that we'd seen over the past couple of days. It appeared that there was some positive trade news sometime coming out in the middle of the night. Apparently, there was a Bloomberg report about Trump getting together with Premier Xi, and that could lead to something good on the trade front. It turned out to be fairly nebulous, but it was enough for the market to want to continue to rally. So, yes, good news, but what really was it? Then when we got to the employment numbers, which again, yes, but they were very good, yes, but there was a big revision lower, and they were not really as good as they might have appeared on the surface. They were more in line when you look at moving averages, when you look at the wage growth and productivity, et cetera. So that again was not enough really to keep the market going. And you had some negatives. Apple has certainly had good numbers, yes, but the guidance looked terrible, or at least not so good. And that stock led the Nasdaq lower. Mathematically, it's very hard for the market to rally if you have Apple dragging you down. Apple's too big of an index component, especially in the Nasdaq. Really, there has to be one hell of a great tone in the market to be able to rally in the face of a lower Apple. So I think that if there's a takeaway from today, and that is when you see the market way higher on the open, and I'm talking about like a percentage point, give or take, on the major indices, that has proven to be more worrisome than when the market opens flat to slightly higher, let's say, quarter of a percent or something like that. I think when you see these huge moves pre-open, I think that's the market's way of telling you that the enthusiasm is probably a little too great. I think it's proven to be, at least over the short term, a better strategy to fade that initial move and then see where the market takes you. And today we've had a very large trading range, at least as of about 11:30 this morning. We'll see where that takes us for the rest of the day. We'll see if people want to go home with positions. I do worry that we started to see a little bit of what I call FOMO, not only me, but what people call FOMO, fear of missing out, taking hold as the market bounced off its lows earlier in the week and started to rally higher. Got to get back in. I think there's some real portfolio misalignment right now. People chasing their tails, and so I think that's all got to work itself through. I've said here and elsewhere that I think that I'd be much happier if the market were to build a base and rally, try to work toward a rally, rather than just sort of looking behind us, going, "Oh, everything's fine," and moving higher. I think the former, the earlier scenario is definitely healthier in the longer term for the market than the latter. We'll see where it goes. In the meantime, again, it's very hard to be complacent in this environment. So again, watch your risks, trade accordingly. Take care. Have a good weekend.